Hello fellow traders. Today we're deep diving into two of the most powerful reversal patterns you'll encounter, the double top and double bottom. By the end of this video, you'll not only recognize these patterns, but understand how to trade them confidently using real-world examples from Ford and Adobe. Remember, trading is about preparation and discipline, and these patterns will give you a strategic edge. Today we're going to get into double tops versus double bottom, and what do they mean? By a pajama trader. Give this a like and subscribe. Let's get into it. Why reversal patterns matter. Reversal patterns can mean the difference between winning a trade and a costly mistake. They're signals that that the current trend may be running out of steam and about to change direction. Whether you're a day trader or a swing trader, recognizing these reversals early can boost your win rate and reduce risk. I want you to appreciate these patterns, and they're not just shapes on a chart. They reflect the battle between buyers and sellers. Spotting them early means that you get on the right side of a major move, and that's what smart trading is all about. Anticipation, positioning, and not reaction. Understanding the double top pattern. When you see two peaks near the same price level following a strong uptrend, that's a warning sign. Sellers are stepping up and buyers are losing conviction. The critical level here is the neckline, the support between the two peaks. A break below it on a high volume spells trouble for bulls. We'll be looking at Ford's chart, and you'll see that the price pushed twice up and failed to hold above 1267. That should set off alarm bells. And watch the neckline at 1222. That's your trigger. I show folks not to get tempted early, but wait for the solid close beneath the line with the volume backing you up. That's your green light to enter short. Understanding the double bottom pattern. Double bottoms tell you a bullish story after a downtrend where the price tests the lows twice without making a new low and then breaks above the resistance peak called the neckline, signaling buyers are taking control. Recently, Adobe's price formed a double bottom with lows near 346 and a neckline resistance around 352 to 355. A break above this neckline with strong volume confirms a shift from sellers to buyers, indicating a potential new uptrend. Adobe's price action shows that the bears failed to push below 346 twice, which is a key accumulation zone for buyers. The neckline sits near 352 to 355, waiting for the price to close firmly above this increased volume, and this is critical. The breakout confirms buyers are regaining control. Being patient and waiting for this confirmation before entering keeps you on the right side of the trade. Trading rules and risk management. Trading these patterns demands discipline. Enter positions only on confirmed close beyond the neckline for double tops, short after closing below for double bottoms, long after closing above. Stops go just beyond the most extreme highs or the lows of the pattern to keep the risk tight. Use the height of the pattern to set realistic profit targets. Volume is your best friend. If volume doesn't confirm, don't commit. Discipline separates winners from losers. I show traders to always stick to the plan. Wait for the breakout, set tight but sensible stops, and work with measured targets. Never chase moves or guess on entry. Volume confirmation is your insurance policy, and don't leave this out of your checklist. Ford and Adobe double top and double bottom breakdowns. Wanted to go over a couple of double tops, double bottoms. So here on Ford, you have a double top here, and then you see what the result was, kind of downturned, consolidated, and then you have a gap up here, and you also have kind of a double top happening here as well. Now, moving over to Adobe, got double bottoms happening all over the place. So anyway, you have most recently double bottom here and here, and you see the result there. And you have, I guess you can consider this sort of a double bottom as well before that broke down. Let's see if we can find a more cleaner one. So you have another double bottom happening here, and as a result you got continued volume pushing this up pretty high. So when you spot these, you kind of have an idea where to go with it when you see it happen. Looking at Ford's recent action, two peaks around 1260 with a neckline of 1222 set our stage. When the price broke 1222 on the high volume, that's your entry for the signal for a short. Set stops just above 1268, the second peak, to protect the capital, and your target being 1177, which the pattern height is projected down. Now let's step into the trader's shoes. After seeing the second filled top, you stay ready and patient, but the breakdown below 1222 is your go-ahead. If the price snaps back above 1268, your stop out signals to cut loss quickly. If it hits your target near 1177, you lock in gains. Following this plan is how you trade with discipline. The Adobe double bottom setup. Adobe's recent price action suggests possible double bottoms with lows at 346 and resistance near 352 to 355. The bullish breakout entry would be above 352 to 355, confirmed on the increased volume. The stop loss would be placed just below the double bottom, the lows near 345, to limit downside risk. The profit target can be set by measuring the height of the bottom, about $6 to $9 from 346 to 355, and projecting this upwards from the neckline breakout, which would suggest a target near 361 to 364. Now let's update our focus on Adobe's current levels. Price tested support at 346 twice, showing accumulation around this level. We wait for a clean breakout above 352 to 355 on a strong volume before entering long. Stops go just below 345 to protect capital, and profit targets stretch to about 361 to 364 based on the pattern's height. Patience here is critical. No jumping in before a breakout confirmation. And this approach grounds your trades in real price action and risk control. Summary and practice advice. Double tops and double bottoms are invaluable reversal patterns that help you anticipate trend changes with higher confidence. Always confirm these patterns with strong volume and a clear break of the neckline before committing to a trade. I encourage you to practice spotting these setups every day on your watch list, backtesting your strategies, and starting with small position sizes in live trading. Build your skill without risking too much capital. Using visual aids like flowcharts can help internalize the process of pattern recognition, confirmation, trade planning, execution, and review. Take this framework seriously. Spot, confirm, trade discipline, manage risk, and review your results. Any recent patterns you found or trades that made you use these techniques, or what really worked well, throw them in the comments. What challenge did you face with these patterns? And remember, these patterns is not about patience and discipline. It's about continuous practice. Thanks again for watching.